Good morning and welcome back to Almus Market Mornings. Adding to the bit of saga we have been discussing about the yen and the joint operation between the Japanese and the Americans, Treasury Secretary Scott Bessant publicly asked the Federal Reserve to boost a facility Japan can use to shore up its currency. Now, Fed has a repo facility through which countries can borrow by putting up their treasury holdings as collateral. This kind of facility provides immediate dollar liquidity, which can be used to shore up their domestic currencies. Coming back to other markets, a bit of positive sentiment for US stocks. S&P 500 has rallied about 1.5%, trading close to its all-time highs. Markets elsewhere remains quite rangy. Good morning, JK. It looks like US is actively trying to work towards a more durable solution for the yen's weakness. What's your thought on this? And of course, congratulations to all Almisians, all clients, and all listeners because we have Almus has completed 14 years in its business. JK, a few words on that as well.
Hey, good morning, Swaraj. Yes, we are very happy to convey that Almus has completed 14 years as on today. And I, on behalf of my CEO Maulik, partner Pankaj Rati, and all the members of the team, thank all the associates and well-wishers for their support for all these years, and seek your continued support to be able to be effective partner in your risk management endeavors. Thank you once again. Yes, Swaraj. So US has been now they're working towards dual goal. One is, of course, on the market yen weakness, which BOJ had been wanting to stop, and they at last got associated with BOJ in this regard. And the other one, of course, is in getting peace agreement with Iran, which of course seems like will have a long distance to go. On the yen, when US announced last week that they will be intervening going forward, they gave a caution type of statement to the market, and they did support this intervention. The market has been wondering why US is supporting this, because on the face of it, it means that Japan intervention would mean they would like to sell treasuries and to raise the dollars, and that would put further pressure on the yields as well. And already yields are at multi-year highs, and that's creating a lot of problems for the US Treasury. But what transpires is that Japan will be probably using the Fed's Foreign and International Monetary Authority's repo facility. So it's a kind of borrowing of dollars or that they would use for FX intervention, and so that means they would employ treasury as a collateral for this kind of borrowing. So that actually prevents the treasury yields from going up. So that's probably one reason why yields have somewhat subsided or rather retreated in the last 1 or 2 sessions. And of course, Japan has spent about $35 billion so far, even on the Friday's intervention, and maybe more, if you count the previous intervention as well. So maybe US also is seeking some sort of a quid pro quo from Japan in regard to their geopolitical strategies, as well as the investment that Japan has promised to US in return for tariffs being cut for Japan. So this is something that will transfer. For immediate relevance for us is that probably this is not increasing the yields, and probably only thing that we will look ahead to still is as yen strengthens, because we have seen it again retrace back to 157 plus. But if yen strengthens more, whether we will have a threat to the carry trades, which is massive across markets, across asset classes, and that is something that the market will still be cautious about. And it's also interesting to note that US Treasury has reported intervention through euro and not through dollars. So, which is significant in the sense that Treasury, this would mean that Treasury is not seeking a broad-based dollar weakness. Although we have not heard any comment from the European side in this regard. So yen strength against other currencies is what we are likely to see going forward as well. So that is something that we'll keep tracking. And on the geopolitical side, oil prices remained lower, while Iran denied having approached US for getting a settlement on the peace, but they have indulged in negotiations with Oman, particularly how to get the Hormuz Strait working for free movement of ships. And I think quietly these peace efforts, or at least some sort of a easing of the situation is on between the neutral countries and Iran. Hopefully that market feels that there's some solution to this, and that's why the oil has stayed lower. Obviously that has boosted the risk sentiment also, because apart from oil price, earnings have been very strong this quarter, about 29.3% growth rate seen from 304 companies in the S&P 500, 5 out of 500 companies. So it's a very good number compared to what the market had been fearing about, because of the higher inflation, oil prices, and also the higher yields, which was coming in the way of bigger, larger performance. So apart from that, we also saw a strong ISM report. ISM survey on manufacturing expanded the fastest pace in 3 years, and coming at 55.6, and employment situation was good. While the new businesses also rebounded, but there was some caution, because the surveys actually said there were geopolitical uncertainties and price volatility because of oil. That reinforces expectations that Federal Reserve can tighten policy further. So there's some cautious survey, but then the number is on the face of it good. So overall, that is good enough for US markets to rally further. Very strong rally. In fact, if you compare with the other markets, US markets have been holding up strongly. As in fact, it has not even entered into a correction territory. So I think the risk sentiment has been held up despite the end intervention, as well as the geopolitical tension still being not resolved. As I said, yields have retreated. As for the dollar, again, yen touched 155, close to 155, and then now bounced above 157. Still, there is a divided opinion among the market participants that whether Japanese economy by itself deserves a stronger yen because of their fiscal position, and also the negative real yield, which is really factor that determines the value of the yen also. Other currencies have been mostly rangy, but broadly dollar stays slightly on the weaker side. And on the, there's also some interesting news that is coming out, or now the rather some reports which say that Kevin Warsh is considering reducing the number of annual FOMC meetings, which is consistent with his broader push to scale back forward guidance and Fed communications. And that could increase probably policy uncertainty and market volatility, because the larger gaps that you have, we keep speculating what the Fed is likely to do. There'll be no official word about it. So this, of course, is a decision to intervene through euro to avoid selling also was some sort of a surprise for the market. So I think market is grappling with these new approaches from the US administration in the currency market, as well as in the monetary policy thing as well. On the rupee, we did make the dollar did make a new low at 95.11. But as we suspected, low levels were used by importers, as well as even the PSU banks. I was not surprised by PSU banks coming in to absorb the selling at these levels. Sentiment has been, of course, quite positive, because oil prices have retreated quite a bit. And at least for now, the global yields seem to have somewhat stopped going up. So the risk sentiment is positive. Indian stock markets are rallied quite strongly. Looking ahead, I think we might settle, at least for this week, in the range between 94.80 and 95.80. But looking forward to accelerated flows through FCNR and other schemes, that is something which we'll keep tracking on. Focusing on RBI meeting tomorrow, where although there will be no change in the policy rate, we look for projections on growth and inflation, and whether any fresh policy moves or envisaged in the policy. So, thanking you once again. Yeah, have a good day.
Thank you, Jake. And yes, so broadly, currencies have been in a range. There have been some interesting and new developments that are happening in the currency market. Of course, which JK also has mentioned, the yen facility and interventions via euro. So all of these are slightly different approaches being tried by the US to create some sort of stability in the broader currencies. And domestically, if you look at it, rupee has strengthened to 95.11 in yesterday's trading, but we saw dollar buyers emerge along with PSUs to take advantage of rupee strength. But more flows are definitely on the cards, and that can sort of keep the rupee also slightly range bound to on the stronger side. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.